All right, so that's all my intro stuff. And now I'm really excited to introduce us to our expert for the day. We have Lindsay Chung. Lindsay is a program manager at Accion Opportunity Fund, and she has more than 12 years of experience in the accounting and finance industry. Lindsay has worked with hundreds of small business owners across the country, more than 20 different industries, from startups to established businesses. She has helped businesses understand their credit and ways to improve it, along with advising them on how to manage their cash flow, analyze their financials, and improve their bookkeeping practices. Lindsay first realized her passion for economic empowerment while proudly serving as a Peace Corps volunteer in Botswana. She has a Bachelor of Science in Business Administration, Accounting, and Finance from the University of Colorado and currently lives in Denver. Hey, Lindsay.
Hi, Brittany. Thank you so much for inviting me today. I really appreciate it. And I want to thank each and every one of you for joining us. Credit is such an important topic for small business owners and something that can be kind of sensitive. You know, as a small business owners, I think we oftentimes have ups and downs in our business. And so it can be really hard to maintain a great credit score, but it's a very important tool in growing our business. And so today we'll go over the importance of credit. We'll also dive a little deeper into personal credit. And you may be asking yourself why we're going to talk about personal credit when we're all small business owners here in this room. But personal credit is really the bridge in order to get business credit, and oftentimes is what lenders will look at to validate if the business is able to pay on the loan in the first few years that it's been operating. Then we'll dive deeper into business credit, understanding it, and then we'll end it by talking about strengthening and repairing your credit. So we'll give you some tips on how to do that. And if you need kind of more extensive support, we'll connect you with some valuable resources. Okay, so why is credit important? So let's start with personal credit. I think some of these may be more obvious than other ones. You know, having a good credit score will help you get credit cards and loans, and will also help you get a better interest rate typically. So you can get more affordable capital when you have great credit. It may also help you rent an apartment or even get a job. I've had my credit pulled since I've been in the financial industry, so that can be something that an employer looks into before hiring you. Having good credit could also get you access to more competitive interest or insurance rates. And as I mentioned before, it can be kind of the bridge to build your business credit. Now, business credit is very similar to personal credit, except it's on the business side. It really shows lenders how risky your business is, and we'll kind of go over the difference between the two different credit, business and personal credit. So this also helps you get access to affordable business financing, which can be really important. If you get a large PO or something of that sort, it can help you order enough inventory to do that. Sometimes businesses struggle because they may provide a service and not get paid for a few months. So it could help get a credit line with a supplier, a line of credit to help manage your cash flow a little bit more effectively. So it can be a really helpful tool. In addition to that, it may help you win contracts or attract investors. It could also help reduce your insurance costs, and it may help you get into that business space or an upgrade in equipment to make your business a little bit more efficient. So let's start with personal credit. So with personal credit, there's two big components. One is your credit score, also known as your FICO score. And on the right here, we have an example of kind of generally what's considered bad to excellent credit. And so there's quite a range there, but that may give you an idea about where you kind of line up. There's three large bureaus, and so that's TransUnion, Equifax, and Experian, and they all use similar models, but you could have a different score with each an individual one because they do have different logarithms and things that they look at when evaluating your credit. On your credit report, it will have more detailed information. It'll show exactly, if you were late, when you were late, the details about the different types of accounts, if it was paid in full or if it's in collections, if you had a bankruptcy, all this information will be included on your full personal credit report. You have access to your personal credit report from all 3 bureaus for free every year under the Fair Credit Reporting Act. You just have to go to annualcreditreport.com and then you pull them for each individual credit bureau there. So typically these don't have scores on them. They will have what's on your credit report. And this is good practice to check this every year because there's a large number of mistakes that may be on our credit report. So just making sure that everybody's reporting it correctly, that your address is correct, and everything of that sort can really make sure that everything is accurately reflected on your credit. And if not, it's important to dispute those errors and get everything corrected. If you want an idea of your score, you could go to creditkarma.com. They do a Vantage score, so it's a little different than a FICO score, but it should give you a good idea of what range you're in. And it also has a nice breakdown of ways that you can improve different pieces of your credit. So this gives us a good idea of how our credit score is calculated. So the most important thing is your payment history. So paying things on time. And so this looks at how often you were late, how many times you were late. A good key is that oftentimes they don't report until you've hit that 30, 60, or 90-day mark. So if you can't, manage all your bills this month and pay them exactly on time, try to do it before it hits this 30-day late mark so that it doesn't show up on your credit as late. So keeping this current is great. And if you did have some bumps, you paid things 30, 60, or 90 days late, then the longer it's been since you've had those late payments, the less of an impact that it will have on your credit. So if you did have some late payments recently, sometimes it's just kind of waiting until there's some distance between when you're applying for credit and when those late payments actually occurred. The amount owed is another really important part. So they typically say it's not a hard and fast rule, but they say to try to keep your credit utilization, so the amount of credit you use compared to the amount that it's available to you, between less than 25 or 30%. So if you, I see this really often for small business owners. They maybe don't have access to credit very early in their business cycle. And so they may use personal credit cards or credit cards to really build up their business. And so what happens is they max out their credit cards, and by the time it's time to get credit or to really, get that capital to infuse into your business, your credit score is tanked because it's such a large portion of your credit score. And it may be difficult to get capital. And it can also be difficult to get capital if you're doing it on your personal cards, because oftentimes lenders don't want to refinance transactions on personal credit cards. So try to keep away from those credit cards. Try to look for capital before you need to. If you get a loan, those tend to be at a more competitive interest rate than you would get on your credit card. Something that can be helpful with this, since it's a large portion, it can be one of the easier things to adjust, just paying down those credit cards. And even if you just pay your credit card a while before it's due, that could reduce your balance. So by the time they report to the credit bureaus, your credit utilization's a little lower. So there's a few things that you can do to kind of adjust and maybe improve your chances a little more if you know that you're going to apply for credit soon. The next most important is your credit history. And so they'll look at the length of time. They just want to see that you've been able to manage credit for a long period of time. And so, you know, if you did get a credit card in high school or something and you don't use it anymore, I encourage you to still keep it especially if there's no annual fee or anything of that sort. And then you can put an automatic transaction through there. So if it's Netflix, just put the automatic transaction through there. And then auto pay it every month. And so it's something you don't really have to worry about. And if you don't like having credit cards around, you can also, you know, chop up your credit card. It'll still report as long as you're doing those auto payments. And so that may help improve your credit history. Something else that could improve it, if you don't have much credit history at all, and you have what we call a thin credit profile, so you maybe don't have many transactions and don't have a long amount of history, then you could see if one of your friends or family would add you as an authorized user on one of their cards, and then their credit history for time will report on your credit report. So that's a good way to kind of move that up a little bit quicker. Another important thing is types of credit. So in addition to the time, they just want to see that you've managed a lot of different types of credit. So that may be credit cards and maybe a car loan, just as many different kinds of credit that you can really helps show that you can pay on all types of different debt. And then there's also new credit. So every time you authorize somebody to pull your credit, it will bring down your credit as long as it's a hard pull. And so you want to be really careful about that. That will also stay on your credit report for about 2 years. So some lenders get nervous when they see a lot of inquiries on your credit report. And that may be a reason for a decline, especially on the business side. There's no shopping window like on the consumer side. So on the consumer side, you usually have a certain period of time where you can shop around, especially when you're buying a house or a car. It allows you to do this to find the best interest rate, but it's not the same for business loans. So make sure you're talking to that lender, understanding whether it's a soft pull that doesn't hurt your credit or a hard pull, before you go ahead and move forward. And I think the best policy is really to be upfront. You know, if you know that you had, you know, a bankruptcy 2 years ago, tell them before you apply. You know, they're going to find out one way or the other. And I think being upfront really helps. It'll help save you time. Some lenders do have policies that you need to have a bankruptcy that's been discharged for 3 years or 7 years. And so knowing upfront whether you would be a good fit may help reduce the number of inquiries you have and help save you time. There are great organizations out there that help small businesses that do have bumps on their credit. And so finding one of them may be a better investment of your time. So I'm not going to go into detail. I know this can be kind of an overwhelming slide. What I want to point out is that good credit or things that are good on your credit tend to stay on your credit report longer, and to let you know that if there are some negative things on your credit, they do drop off eventually. And so, you know, if you have a really old collections and you don't even know who to contact about it, and you know, it's 6.5 years old, you know, you can know that it'll probably fall off your credit report soon. And so that may, you know, give you some ease about, you know, what's on your credit report and what's not. So best practices for building strong personal credit is obviously, you know, to pay on time if you can. If you can't, try to pay before that 30, 60, or 90-day mark. Pay the full amount whenever possible. Ideally, you know, in a perfect world, we would be able to, you know, just pay our credit cards off right away. If that's not possible, just try to get your minimums in before that mark, and that will really help. Aim to keep your balances low. As I mentioned, 30% or less is ideal out of the total credit that's available to you. And then try to establish multiple trade lines. Never take out more than you can afford. Make sure you know, that you're being as responsible as you can with your credit, and then avoid getting too many inquiries. And some things just take time. You know, if we had some recent late payments, generally, if we actually did miss those payments, there's not a ton that we can always do about that. And so sometimes it just takes time for those to fall off, and same with inquiries and things of that sort. So some ways to repair your personal credit. pay off collection accounts, and make sure that you really, think about, what you want to do as far as those collection accounts go. We'll talk about, some free resources, and you may want to talk to a professional to really get an idea about how that's going to impact your credit, and what the different things are, because you can negotiate with your creditors, but sometimes it reports on your credit that it wasn't paid in full, and that could impact someone's decision. So looking at the pluses and minuses of negotiating credit or consolidating it is always helpful. Create and stick to a budget and a structured payment plan to manage finances. So something I encourage, if you have a lot of debt out there, is to make a debt schedule, write down all the debt that you have, the outstanding balances, your payments, your interest rate, and come out with a plan that works for you. If you're really focused on, saving the most money, then maybe paying off the highest interest makes sense for you. But there's a number of different methods that do work for people based on kind of what payments you can afford and things of that sort. And then it's always good to stick to a budget. This could be really basic budget. Like when I was younger, we would put, money in envelopes in order to do that. As I'm older, there's a lot of great software out there that can help you kind of manage your budget. But just make sure you're trying to, live within your means as much as you can, and paying down that debt's really going to help your credit score, and improve your chances of getting credit in the future. Using secured cards can be helpful. There's also credit builder cards, like self.com has credit builder loans that are small loans that kind of help you rebuild your credit. Secured cards are credit cards that you get from a lending institution, a bank, a credit union, something of that sort. And what they do is they'll extend you credit, like $500 in credit, and then you have to put that $500 in a bank account. This makes them feel more comfortable with extending credit to you. And then they also report on your credit. So you can start building up that credit as time goes along. And then manage your credit report. So make sure that you're aware whether people are pulling hard pulls on your credit, and try to reduce those as much as possible. Okay, so now we're really diving into business credit. So personal credit is a gateway to business credit. So it's good if you have that personal credit, repaired and in place. Your business structure being formalized and registered will really help keep the consistency on your business credit report. And so I encourage you to request an EIN number. If you haven't, you request this from the IRS. It's a really simple process, but this is what you use to pay taxes. And then you can also request a DUNS number. This is also free. You do this through Duns and Bradstreet. And this is the number that they report to. And so that allows you to have them report on that number. The DUNS number also had been used in the past for federal contracts or grants, so there are other benefits to having that established. And then having your personal credit, in good shape is a good first step. Having a business bank account is really important in using it. So separating your finances, and I know this is really, really hard to do in the earlier stages because you are your business, and, with cash flow being tight, there's a lot of exchanges between the two, and it may feel a lot easier to just have a personal one, but it really helps. It helps not only for you to get a clear understanding of what's happening in your books, but it also helps your accountant. It helps all sorts of people, lenders who will be looking at your reports. We also have grants and loans with us, and we do require a business bank account for that. So it can really open a lot of doors for your business and is a good first step. So ideally, your business is kind of incurring regular and predictable experiences, and you have a clear plan on how you plan to grow the business or build the business. And then just making sure you have a capacity in order to manage or repay the new debt. So I think this comes along with the plan, making sure that you're looking at the opportunity that you have available, and you looked at the cash flow, and it all makes sense to pull out that credit. So an introduction to business credit. So business credit's very similar to personal credit. There's a score and there's a report, but there are some key differences. So the three main largest business credit agencies is Dun & Bradstreet, Experian, and Equifax. They both have a business line along with a personal line. And then there's also something called a FICO SBSS score. This is typically what the SBA uses, and it's a combination of a personal credit score and some information from Dun & Bradstreet and a few other things in there to kind of come up with that amount. So that just shows you more how entangled your personal and your business credit can be sometimes. Some key differences is it's kind of less regulated. So as a consumer, we have a lot of rights. We have rights to get a free credit report from all the different bureaus. We have rights to dispute charges and have them removed if we don't hear from the creditor. So we have different rights like that. Those don't exist so much on the business side. And so that kind of impacts you when you're coming to monitor your credit or seeing if there's anything on there that may cost you some funding in order to do that. There's more than one credit score. So with the personal, we have one kind of model. This one has all different models and all different standards of what's considered good and what's not. And so this should give you an idea. It's not as forgiving as a personal one. The standards are a little higher on the business side. Typically, if for Dun & Bradstreet, you do need to apply for a DUNS number. And not all lenders report bills. And so it's important to make sure that they are reporting it. As you're talking to vendors and lenders, you can start to ask them these type of questions, what they'll report on, when they'll report on them, things of that sort. And with business credit, if you pay early, it can really benefit you. And another rule is with the personal, I had mentioned that you want to pay before it's 30 days late because then that's typically when they report it. There's not the same rule on the business side. So you can be 1 day late and they could report it. Each different agency has their own rules around this. And so it depends on the agency, but it's really important that you can pay on it because they have different standards on when they'll report a late payment. Anyone can check your business credit score. So that may be something that people do in due diligence, like if they want to partner with you or invest in your business or things of that sort, they're able to look at your business credit. Another thing is that you can submit additional information to credit bureaus, like Dun & Bradstreet allows you to report certain things as far as finances go or recommendations from suppliers, things like that. So you can kind of look into maybe things that maybe you could get added to your credit report that aren't there. So that's the biggest thing. All these different bureaus look at your credit a little different. Experian tends to be a little more focused on kind of bank data. Equifax, they tend to lean a little bit more on small business lenders. And then D&B focuses more on suppliers than the other one. That's not solely what they focus on, but they do tend to lean more one way or the other here. So what factors affect my business score? I know this is more than what is on the personal one, but don't get overwhelmed. I feel like an important thing to think about is something I tried to do in life, is to just focus on the things you can control and let go of the ones you can't. Like, for example, you're not going to change your industry just because it's not great for your business report. So don't focus on industry risk or business size or those type of things where you have no control on. Focus on the things that you do have most control in. And the most important thing for a business credit is a payment history. So really building up that positive payment history is important, and paying earlier on time as much as you can will help bring it up the fastest. We have the same credit utilization that we did with personal credit. And another way to improve this that I didn't talk about in the past is it may be possible for you to get an increase in the amount of credit that's available to you. So it feels like you're creeping up and you're holding higher balances on your credit cards. Feel free to call the creditor and say, we've had a relationship for a long time. I'm wondering if you'd reevaluate and see if we could increase my credit line. And so things like that and getting kind of ahead of the problem may help prevent the problem from happening. Because if you charge up those credit cards and they're almost maxed out, then it's going to be really hard to go asking around and seeing if people are able to give you more. And it's helpful, you know, as a business, if you can get like a line of credit or credit with your supplier, this can be really helpful in managing your cash flow, you know, and then you don't have to worry as much about missing payments because, you know, if you don't get paid when you're expected, you can just pull down from a line. Or, you know, if you're not going to get paid by your customer for a long time, maybe your supplier will allow you to wait until you get paid to pay them. So, you know, that will really help as you're building and growing your business to take advantage of those type of opportunities. And as you have more credit, you build more credit, you know, it's a cycle that can really feed off of each other. They'll look at outstanding balances, trade lines, all similar to kind of how the personal credit works. So we have the same thing for personal. So I just wanted you to let you know that things do fall off your business credit report too. We will be sending this deck, and so no worries, you don't have to look at all these, but each bureau kind of has their own rules about how long they keep things on your credit report. So these are just helpful things to reference. Some best practices for business goals, business credit. Think about how it can achieve your goals. Business credit can be really important for capital intensive businesses or people that plan to really scale. As a maybe mom and pop shop where you don't want to hire anybody, you just want to work for yourself and you don't see yourself, you know, expanding a lot. Maybe business credit isn't as important to you, and maybe it's not important to, you know, pay for those credit reports regularly if it's not essential. I think it always helps to build it up, especially with just credit cards or things of that sort. Always separate personal and business as much as you can. Separate bank accounts, separate books as much as you can. Consider every credit opportunity carefully. So make sure when you're looking at credit, there tends to be like a lot of online lenders that don't report on your business credit. It would be helpful if you got out credit that you could show that you paid on that credit so that you can get access to more affordable credit in the future. You know, interest rates all range, making sure that you can afford it. Some lenders don't focus that much. So maybe if they're not asking for much documentation or don't need to know much about you in order to give you a loan, then maybe they're not focused on your ability to pay so much and maybe focused on their ability to collect. So always, you know, do the due diligence for yourself, come up with a plan. What is the opportunity you have available to you, and how are you going to pay this back? And how is that going to impact your cash flow in the long run? Make sure that, you know, the opportunity is much bigger than what the cost of the loan with the interest rate and the fees and things of that sort would be. So you can make sure that you take that out with confidence and you know that you'll be able to pay it back and won't have to lose sleep at night in case things don't work out as much. So focus on paying on time or early when you can. I think that's kind of an obvious one. I'm sorry to repeat it. It's generally just the most important thing on the personal and the business side. And then learn to read your commercial report and monitor it, especially if business credit is an important part of your plan. And then you need to be patient. Everything just kind of takes time. So now let's go more into like strengthening and repairing your credit. So it's always good to check your credit report, see if there's any errors. Even on the business side, there tends to be errors. Maybe your business name isn't exactly correct, so people pull it up and they get the wrong business, and that person doesn't have great credit. So even small things like that, making sure, you know, your vendor's reporting it all correctly. You know, we're not perfect. I think, you know, everybody makes mistakes. So just being on top of that and really knowing what's on your credit report can be really helpful. And so with personal credit, you know, typically you want, and business credit, you want to gather as much evidence as you have about the transaction, so showing that it was paid or that it was fraud, or you know, all the evidence that you can present. And you want to reach out to the creditor and to the bureau. For business credit, each bureau has an easy kind of way to go in and submit a dispute form on their website. And for the personal side, if you don't hear back from the creditor when disputing it and you have verified proof of that, you can go to the bureau and ask them to remove that error on your credit reports. Establish new trade lines and make sure that you know, you're building positive payment history. And then if you can, utilize credit accounts as long as you know that you can pay it back responsibly. So here's some obvious signs. You may know that you don't have great credit or business credit, but if you get a denial of credit, and so that may be worth kind of taking a deeper dive. Typically in an adverse action letter, they'll provide some basic details about why it was denied. So it may be utilization or things of that sort. Usually they give you a few different things. They're supposed to tell you exactly why you were declined. And so really diving deep into those and figuring out, what's going on there can be helpful. If you're experiencing higher interest rates, then you're probably, have bumps on your credit. Decreased credit limits, sometimes, with lines of credit or things of that sort, those might be decreased or eliminated. So that could be, a sign to move forward. And then, of course, collection calls. So we kind of went over this, just going over, correcting errors on your credit report and then following up with credit bureaus to make sure everything is correct. Common problems, late payments are probably one of the biggest ones. I feel like these days I talk to more small businesses that have high credit utilization. It's just really hard not to do that when it's so difficult to get financing in those first few years. So just trying to be as proactive as you can before we charge up our credit cards can go a long way. Errors on credit reports, about 20% of people have issues on their credit reports, so that could be a really easy, simple fix. And then collection and charge-offs tend to be a big issue. So if you're feeling overwhelmed by, debt or financial help, please seek help, and we're going to kind of go over the different types of help that are available. But it can feel like it's easier in the moment to just forget that the problem even exists, but really, coming up front and having a plan and feeling like you're in control of the situation can really alleviate some of that stress. Struggling to understand your credit report or credit score, there's plenty of people out there to help, translate it. Sometimes it can be difficult to read and to understand. For example, on business credit reports, they don't typically have the vendor's name on it or the creditor's name. And so sometimes it can be difficult to figure out who that is and who to follow up with. And then if you're facing issues with creditors or collections and they're not being helpful or forthcoming, please reach out to somebody who can help support you. So we have credit advisors in-house. I actually help on the credit advising team, and we can help provide tips on how to access capital and credit to help your business grow. And then there's also credit repair services. So they help with removing negative items and negotiating with creditors. The best time to come to us is when you're starting to look at building your business credit, you're looking for a loan, you want to get a better understanding of how to manage your finances effectively. We can really help you understand how to improve your chances of getting funded, how to connect with trusted resources, and work with you to develop a solid financial plan. So all our sessions are completely free. I put the link there. I'm sure Brittany will put one in the chat if you want to book with one of our credit advisors. There's also traditional credit repair services, and these companies are great if you're facing pretty significant challenges on your credit, or if you want somebody to really go line by line and come up with a credit strategy or debt refinance strategy to really go deep in the weeds. Then more traditional credit repair services may be helpful. They can help you negotiate with creditors if that's the plan you go on, and also see the pluses and minuses of different strategies. This industry can be a little dicey sometimes. So I wanted to give you some tips about kind of how to navigate this space. So beware of promises that sound too good to be true. Make sure you're dealing with a reputable agency. And so you can always look at the Better Business Bureau or look at reviews online to see how people are feeling about the company that you're thinking about working with. You know, you're sharing really intimate financial details and trusting them on a really important thing for you and your business. And so just make sure that you're getting in a partnership with somebody who's looking out for your best interest. It helps if they offer, you know, counseling or education along with it. Generally, those companies are more interested in helping you and ensuring that this doesn't happen again to you. Carefully read through any written agreements in case anything's stuck in there or you don't understand everything. We do have a coach that specializes in legal matters. So if you want them to kind of look through it and flag anything that you should be aware of, you could book an appointment with them. Or if you have questions about specific points, we could definitely connect you with a coach. Beware of high fees or required contribution or upfront fees. If they say you need to pay a ton of money before they do any work, I would be concerned. And if they're charging really, really expensive fees, I wouldn't, you know, move forward. Make sure you're confirming that your creditors are actually getting paid and everything's going kind of as planned. We highly recommend working with nonprofit organizations. So we have a number of trusted organizations that we worked with for years that we vetted. And one of them is Mission Asset Fund, Money Management International, and Trust Plus. These organizations will help go through line by line on your credit report, negotiate with you, come up with payment plans or strategies on how to reduce your debt. And so they can be really helpful tools to help, you know, give you hope and move past anything. So this is kind of a summary of it all. Make sure you're correcting the errors on your credit reports, establishing new credit lines, utilizing, you know, credit that is available to you, paying bills on time, and then just avoid applying for things that aren't really a good fit. So, you know, if they're looking for people with great credit scores and you know yours needs a little work, maybe seek out a lender that can kind of fit where you currently are. All right, so that's it for my portion. We'll go into question and answer portion, then I'll go ahead and hand it off to Brittany for that.
All right, thank you so much, Lindsay. We have some really good questions coming through. So I've been taking notes over here. So I'm just going to pull that up, but it's not too late. So if you do have questions, please go ahead and drop them in the chat. Okay, so one of the main questions we were getting is, how can I check my business credit score, and is it free?
It's not free. So you have to go directly to those 3 bureaus that I talked about earlier, and it's not free, unfortunately. You have to pay to do it. And so, you know, it is worth evaluating whether that's really important for your business or not. You know, it does have a fee to it, and not all businesses need a lot of business credit. You know, it really depends on kind of what your plans are for your business and things of that sort. So you do have to pay, unfortunately.
I see a couple of questions asking about the nonprofit resources. I'm going to redrop those in the chat so that you guys can see them. They will also be in the follow-up email. So if you didn't grab it or your Zoom's acting weird, no worries, they'll be there for you. Okay, you mentioned earlier that anyone can check your business credit score. So there was just a question about clarifying that. Can someone who wants to partner with me look at my business credit score without my permission?
Yes, people are able to look at your business credit score.
Awesome. Okay. And then how do you know if you even have a business credit? Especially if you've been approved for a business credit card, but you haven't used it yet.
Yeah, you know, that's hard. You have to pay for it, generally. You know, some of the bureaus won't report unless you have at least 1 or 2 trade lines. So I would follow up with the person, you know, and see who they report to. And then you can pull that credit report and just make sure that it's reporting just as you kind of expected it to report.
Got it. Awesome. And I'm glad you brought up trade lines because there's a couple questions about that. The first one is, can you give an example of what a trade line is?
So it's something you get with your supplier. So if you're in, a really like you buy a lot of food from somebody, for example, in your restaurant, sometimes your food suppliers will give you a line, and that allows you to wait and to pay until later. And so that's the same. There's distributors that do that, and different groups. So I'd look at who you buy stuff from and see if they offer lines or just more favorable terms. Can you pay them on a net 30, net 60, net 90 type of thing? And so you wait a little bit longer to pay them, which could, help you manage your cash flow. It's very similar to a line of credit, but it's with a supplier
Got it.
or vendor.
Perfect. Okay, let's see. There's a couple of questions about how can someone go about checking my business credit score, or how can I go about it? Can you just reiterate that?
You have to pay. I mean, there are things that, like NAV or different groups have it where like you maybe buy a membership and that allows you to go check different ones, but I don't know of any resources that are free. If you know one that is completely free where there's no membership or any other charges, let me know. But most of them do require, even if it's, not through the bureaus and you're not buying the individual reports, they generally require that you have a membership or some sort of money exchanged in order to get them.
Got it. Okay, so there's those different kind of websites that you can go to and you basically pay a fee. There was a question here about what can a small business do if they're on the wrong side of their credit? So I think maybe he's having some issues with their credit score and they're trying to avoid loans. So is there any business relief, or like basically what can they do if they've gotten on the wrong side of those things?
Yeah, I mean, it's challenging because I understand if you've been burned and you don't want any more credit or no credits available to you, that may be, something you don't want to do. You could look at grants. There are grants available. We have grants as an organization. We have one called Fast Break for Small Business right now. We also have FedEx e-commerce learning lab. So you could maybe look at just other ways to fund your business. There's also crowdsourcing. We also have coaches that specialize in access to capital, and that's not just loans. That could be a number of different things. So you may just need to get a little creative on how you kind of structure things. Grants aren't guaranteed. There's definitely pluses and minuses to both, but if you really don't want to get a loan out and things of that sort, you can do that. I still would encourage you, when you can, to try to rebuild your credit, even if you don't think you'll ever take out a loan or don't need to. You just never know. Like, you could come up with an amazing partnership and, I don't know, King Soopers wants you in all your stores or something, and you have no credit at all, and you won't be able to take advantage of that. Or maybe you could if you found a rich investor, things of that sort. But there's just certain opportunities or unexpected thing like a refrigerator breaks and we just don't have the cash flow. You may have no plans to use credit, but it's always helpful to have it there just in case, even if it's not in your plans. And if you don't want credit cards, get out a secure credit card, put something that goes through it automatically and pays it automatically every month, and cut it up or put it in some water and freeze it in your freezer or something, so you can't have easy access to it if that's not what you want.
Yeah, excellent point. I see some people asking about information on our grants. We actually do have a grant open right now for packaged shelf-stable businesses. So I'll drop that in the chat, but I'll also drop our resources in the chat again. So if you have a very specific question, I promise I am not ignoring you. We want to make sure you get all the attention you deserve. And so I'm going to redrop that link to schedule a free session with an advisor so you can get that one-on-one attention, because some situations are just easier when you can have that free-flowing conversation. So just give me 1 minute and I'll redrop that link and the link to the grants. Another question we had is, earlier on in the presentation, you mentioned that you can send recommendations to Duns and Bradstreet to like increase your business credit, I believe you were saying, or just kind of supportive documents. Can you, what types of things would you suggest?
So they do have a specific list, and I would go to their website on exactly what that they allow. But generally, like if you have a line with somebody who's not currently reporting to them, if you have evidence about your payment history and all the documents that they need, then they could add it too. But I would go to Dun and Bradstreet because they have very specific requirements on what it takes to do that. But you can do similar on your personal credit. There are ways now to report on different things. So if you don't want credit and you want to build up your credit, there are ways maybe to get your rent reported, or utilities, or a cell phone bill. Experian Boost has an interesting program. So there are creative ways where you can kind of self-report or get things on your credit report that aren't, the typical ways. It just takes, a lot more effort than most other things.
Yeah, that makes sense. Someone asked, will business and personal credit show up together?
So with the SBS score, it is kind of a fusion between those two, but generally not. Like if you had a personal bankruptcy and on your business credit report, if it's through Duns and Bradstreet or Equifax or Experian Business, then generally it won't show up there. They are separate, and vice versa. So if you had some missed payments on your business side, that won't show up on your personal, but if you are doing that SBS score, that will show kind of a fusion, and that's what the Small Business Administration looks at, which is the largest guarantor of small business loans. So, those are always kind of tied together a little bit, and oftentimes, if you're starting up, most lenders these days want a personal guarantee, unless you've you've been in business forever and have like a really robust business profile. Generally, they're going to look at your personal credit and they're going to want you to personal guarantee it. So then you're responsible for the loan, whether the business succeeds or not. And so that personal credit is always generally going to be important for your business. Almost always. I'll put a qualifier there.
Almost always. Yes, there's always a little asterisk, next to anything. Okay, this question is basically, we've had a couple of questions about high utilization of their credit. Like people have high utilization of their credit. Are there any recommendations on countering that?
Yeah, I think there's a few things. And I think this is the biggest problem I see with entrepreneurs, to be completely honest with you. And I feel like our system makes it really hard to get startup financing. And so that's what people generally go to is their credit cards. And so the three or the main things that I would do with that is try to reach out to your creditor who you have the credit card with, see if they'll extend your limit at all. And the earlier you do that, the more of a chance that they'll be willing to do that. But say, hey, we've had a relationship for 10 years. I paid on time. I'm expanding this or doing this, and I really could use a higher limit. And so, you can look at doing that. That'll help. If you're about to apply for credit and you want to reduce your utilization, just try to pay them down before the due date, before it shows on your balance, because then generally, if it's paid down when they report, then it's going to show lower on your credit report. So like I don't pay on the due date generally. I usually pay a bit before the due date, just so that when it shows up on my credit, I don't have a large balance on my credit cards, and things of that sort. So those type of things can be helpful with credit utilization. Or just refinancing your debt. So finding somebody who's willing to refinance the debt into a 1 monthly payment could be a helpful alternative to kind of deal with that utilization rate. And also loans generally are more affordable than credit cards. And so, refinancing that may help your business.
Ooh, okay, great point. And that kind of goes into the next question that we have pop up, which is, do you think it's better to get a loan or a credit card when you're looking for credit, basically?
That's a good question. I think it always depends on what you're getting it for. So credit cards can be helpful just like as a backup if you need it. I'm not a big believer in keeping balances on credit cards. They're expensive. Loans generally are more affordable, but it may not make sense to pull out a loan if you know Mother's Day is coming out and that you're a flower shop or something, and you're just going to need that for a little bit of time because there's a loan fee that goes along with a loan, and generally you're responsible for that no matter what. So if you're just getting a loan for a couple of months, that doesn't make sense. If maybe you have a hard time just managing cash flow just because the time when you pay your employees or supplies or things of that sort is far different from when you receive payments from customers. And you just always have that gap there where you maybe need to pull for payroll here and there. A line of credit is ideal. It can be more difficult to get a line of credit. So, if you're start a business, generally that's not an option, but there are lines of credit. There's also charge cards. So if you're, going to get paid that month and you're going to pay it, then you can get a charge card. But those kind of come with time as your business develops. So it's all kind of based on what you're doing. Even if you're buying a specific thing, like, you want a specific type of equipment loans are a little different. And generally you can get longer terms if you're buying equipment. So just making sure that you have the right product for you. And if you meet with one of our Access to Capital coaches, you can talk about your specific situation. They can fit you with the type of, vehicle that will help you achieve your goals there.
Yes, that's such a great point. And I'm going to redrop just because we can never have the links too much, the link to the our overall coaching page. So if you go to this link, you will see there are a lot of different topics that you can choose from. And so we're talking about that access to capital spot on the menu. So that's where you'd want to, take a look and book your call. Okay. And once again, if you have a, a very specific question or we run out of time, we don't get to your question, we want to make sure you still have resources. So you're going to get the recording and the links tomorrow to your inbox, but also please feel free to, schedule that call if you need a little more support. Okay. Lindsay, so earlier on, you were talking about, credit and how in personal credit, you're able to shop around if you're looking for a car or basically shop around for different interest rates. And so the question is, do those inquiries not affect your credit score during that window?
As long as you do it in the window and you're buying a house or a car, that's okay. And so I do encourage you, if you're buying a house, to, apply to a few different people, see what kind of rates are out there and get the best rate. That's going to make a huge difference in your life, even just a few percentage points. It's not the same with businesses. So I do see people who shop around, or some people even go, there's like online broker type of things where they'll get you checked out by a few different people. And sometimes if they do hard pulls with all those people, that could eliminate your chances from getting a loan from anybody else. So sometimes if you have a few different inquiries from different lenders start to get nervous and they say, well, why didn't anybody else give them a loan? Or do they have a loan with all these other people? And so it really starts to raise these questions, and some people are just nervous, when they see a lot of inquiries. So it not only brings down your credit score, but may hamper your ability to get loans just on the fact that you have a few different inquiries. So talk with that lender. A lot of lenders have minimum credit score requirements, but I would say just lay out everything up front. Say, I didn't report a profit on my taxes, or I had a bankruptcy 2 years ago. Just put out all your dirty laundry in there, out there, and see if that's the type of deal they can do. And if not, go find somebody else who maybe specializes in helping people who don't have perfect credit or who have different difficulties finding credit.
Yeah, got it. Absolutely. Okay. And then this question is about increases in credit lines. So some folks have mentioned that their credit card companies are offering them increases in credit lines, but they're not sure if they should take them. So any insight on just taking the offering of an increasing credit line?
I mean, I personally would. That helps your credit. You know, we talked about a lot about credit utilization, and the amount of credit that you have available to you is important. That's going to bring down your utilization rate, and you don't know when you'll need it or not. I think the important thing to ask yourself is if you're good with that. I think sometimes if we're offered a lot of money, then we come up with all sorts of ideas on how to use it, and maybe don't always use it the most effective way, or just don't manage it very effectively if we have a lot, you know? And so if it's difficult for you to have that mindset and to really think through the decision and say, okay, well, I can use this. This is how much profit I'll make off of that. That's going to cover all the interest expenses and hopefully some profit in there. Then, you know, I think that that's a good point to make sure that you're making really, really important decisions when it comes to that. But it will help your credit utilization portion.
Yeah. Okay, love that. And then let's see. Okay, we have a couple of questions about folks who they have had some challenges with their personal credit. So they're working on, fixing their personal credit, but in the meantime, when it comes to their business, is there a way to apply for a business credit card without your personal credit or your social security number, just your EIN?
There may be. It's definitely far more work to find that, and generally it just makes more sense to really focus on that personal credit, because that's just the key to building it. I know that that's difficult because some things it just takes a long time to build up, but it can be really challenging. There are, credit, like Dream Spring has like a credit building loan. And so, there are things like that may help you kind of start with I don't know if they report to your business credit, but that may be something you want to look into. It has like, sometimes it's available and sometimes it's not, but keep an eye on, there's like small business credit building loans available at some certified community development financial institutions. So we're a certified community development financial institutions. There's a number of amazing institutions across the country that does work with small businesses that maybe have bumps on their credit, and can help you kind of fill that gap in between starting up and getting that business financing.
Got it. Thank you so much, Lindsay. I know that was rapid fire. And thank you everyone for coming. I know there were a lot more questions in the chat, so I apologize if we didn't get to your question, but there will be resources coming for you. So we have those free coaching calls that you can get on for many things, but access to capital is kind of our topic here today, so that folks can really kind of be there and have a little more of a personal information. If you are writing like crazy, that's okay. We have the presentation and the recording coming to your inbox tomorrow. We hope you feel more prepared to tackle some of this and, repair your business credit. And we will see you all in the next one. Thank you, everyone.
Bye, thank you.